With the increased popularity of cryptocurrency, the term DeFi has been used many times. DeFi is a short form of decentralized finance. It is a term used for various financial applications in cryptocurrency blockchain or blockchains aimed to shake the traditional financial intermediaries. The main idea behind DeFi was generated from the blockchain itself, which is the technology behind the infamous Bitcoin. The blockchain allows several entities to hold a copy of a history of transactions, indicating that a single and central source does not control it. In this video, we will dive deeper into the world of DeFi and understand how it is challenging the current financial systems. Please subscribe and turn on the bell notifications if you haven't to help me with the YouTube algorithm. DeFi is unique because it expands the use of blockchain from simple value transfer to more complex financial use cases. In general, Bitcoin and the whole crypto universe stand out from the legacy digital payment methods backed by Visa or PayPal. By doing this, they remove all the third parties from the transactions. Now, the question that arises is why DeFi is becoming popular and exploding day by day. DeFi has undoubtedly facilitated financial freedom around the globe. It offers a path for investors to protect their wealth from rigid capital controls such as traditional banks. To top this all, DeFi makes the remittance process faster, more straightforward, and more cost-effective due to high-end technology involved. Another loophole that DeFi fills is that it is not restricted to wealth or status, and almost anyone can become a part of this disruptive idea. This is a significant advantage for those who cannot utilize traditional financial services because they lack formal documentation or the absence of such services in their home country. These are major factors acting as a catalyst in their popularity and explosion. In the not-so-distant future, it is highly possible that people will switch from traditional financial services to more digitized services such as DeFi. It is not easy to replace the traditional financial institutions, and as a new investor, you must be thinking about whether DeFi is a good investment or is too risky. At the beginning of 2020, the digital assets locked in DeFi protocols were around $1 billion. However, as of 2021, approximately $40 billion are locked in the DeFi protocols. DeFi protocols are used by multiple entities at the same time to build a service or an app. The protocol layer provides liquidity to the DeFi ecosystem. When assets are locked in DeFi, it means people are sending their assets, likely to be Ethereum, to smart contracts on the blockchain. A smart contract is a computer program stored on a blockchain that runs according to the terms of a contract or an agreement without any third-party involvement or time loss. This massive rise in the value of digital assets being locked in DeFi protocols has caused many financial and crypto experts to warn the ordinary people that there might be a potential bubble surrounding DeFi, and it may face close regulatory scrutiny in the future. You have the option of trading DeFi assets on exchanges such as Uniswap, SushiSwap, and Bancor. The traditional approach to make a profit is by buying low and selling high when a solid opportunity arises. Another way of making money in DeFi market is by yield farming. Yield farmers make a living by providing liquidity in the form of crypto assets to a decentralized exchange. The exchange then uses this liquidity to execute orders created by token swappers who pay fees. On the other hand, the yield farmers earn a portion of these fees. The third approach of profiting from DeFi is by earning interest on a lending protocol. Lending protocols are decentralized loan platforms where borrowers and depositors interact with each other. While one group supplies liquidity for the sake of earning interest, the other group takes the liquidity in the form of a loan and pays interest. All DeFi wallets have a unique key pair and the user is responsible for the safekeeping of their private keys. This is different from a centralized wallet where the platform may be able to help you recover your keys. Private keys are typically introduced through a 12 to 24 words phrase. Therefore, you must have a backup of your private keys to keep your DeFi assets secure. I recommend having multiple backups because losing your crypto is a nightmare and almost impossible to retrieve back. If you want to learn more about safely storing crypto, then I have video about that too. Before pouring your investments into DeFi, there are definitely few things you must consider and make a well-informed financial decision. By going for DeFi, you are investing in an asset with a higher security risk due to its new and largely unaudited nature. These variables and the uncertainty they bring are also why profits are so much higher and the swings so massive. The cryptocurrency investments already come with an inherent risk, and if you double it down with DeFi investment, you have a chance of amplifying your risk. As an example to give you a clear perspective, most of the available platforms compel users to lock their staked funds for a given period if a user wants to invest and stake his money in DeFi. During this period, crypto prices may rise or fall at an insane rate, and the holder is prevented from buying or selling. It is essential to highlight some risks that come from investing in DeFi. Firstly, you may face technical risks. DeFi is still in a very early phase, so the technologies are not perfectly completed. This may lead to security breaches and external threats such as threats from ransomware viruses. Crypto ransomware essentially takes the files hostage, demanding a ransom in exchange for the decryption key needed to restore the files. Secondly, you are exposed to financial risk. Liquidity is the ease of converting something to cash and the ability to still maintain its value, and liquidity is one of the most significant problems for DeFi applications. The primary purpose of crypto investments is to be as liquid as possible. Lastly, systematic risk is also a major concern. Many DeFi applications rely on the price of Ethereum, ETH. If the ETH price falls to an unexpected low, that may affect the entire DeFi ecosystem because nearly all the dominant DeFi applications are built using Ethereum-based smart contracts. Apart from this, DeFi networks use different mechanisms to calculate the value of the tokens locked in their platforms. Unfortunately, these same mechanisms may also have negative consequences such as impermanent loss and price slippage. Impermanent loss is a temporary loss of funds occasionally experienced by liquidity providers because of volatility in a trading pair. These losses are only recognized when you withdraw your coins from the liquidity pool. A liquidity pool is a collection of funds locked in a smart contract. Liquidity pools create a market to facilitate decentralized trading, lending, and many more functions without having another third party or counterparty to be in the transaction process. Slippage refers to the difference between the expected price of a trade and the price at which the trade is executed. Slippage can occur at any time but is most prevalent during periods of higher volatility when market orders are used. The term "late to the party" applies in the crypto world to a great extent. Investors who jumped on this DeFi earlier in 2020 made a huge chunk of profit. Many DeFi tokens such as YFI made 20x to 1000x price increase. With all the facts presented, the question is, can DeFi be considered a good investment? By looking at the current popularity and new protocols popping out from all directions, the answer is undoubtedly yes. However, your risk management should be a top priority when investing in risky assets such as DeFi. You should not go all in on DeFi and instead begin with a modest investment to properly analyze the DeFi market. Now that we have understood what exactly DeFi is and the risks that comes with it, let's dive into some standard DeFi tokens and analyze them. First, on the list, we have Cake. In 2021 alone, the Cake token was approximately 1,200%. The perfect approach to predicting any asset's price is by looking and observing the previous price actions. According to many support and resistance levels, Cake is expected to range between $8 and $15 in 2021. Binance backs the Cake as it was built on the Binance Smart Chain, hence, making the asset a good investment for long-term. The connection to Binance gives the decentralized exchange an expansive network of assets to transact, a scalable and high-throughput platform with low fees. If the scalability and high gas fees for Ethereum continue to be a concern for investors, then there is a high chance that the demand for PancakeSwap will increase, which will directly impact the price of Cake. However, Cake project is still in the building phase and has inherent risk too. Therefore, you must do proper due diligence before investing in Cake. The second DeFi token that must be on your watchlist is Compound. It is worth mentioning that Compound runs on the Ethereum network, which is common with various other DeFi protocols. This has presented many issues as the Ethereum blockchain has been facing many challenges regarding scalability. Scalability in crypto refers to the ability of a cryptocurrency to cope with the influx of a large quantity of transactions at a time. For example, Bitcoin operates smoothly at 7 transactions per second. If there are more than 7 transfers per second, then all transactions are queued. A promising technique to solve Ethereum's scalability problem is sharding, which breaks large amounts of data into smaller pieces and is being designed for ETH2. Thus, this sharding technique reduces network congestion and increased transactions per second by creating new chains called as shards. Compound is a must-watch because it has been in operation for several years, reflecting good long-term growth. In 2018, Compound attracted almost $8.2 million in investments from prominent venture capital brands such as Bain Capital Ventures. According to WalletInvestor.com, Compound has the potential to hit $751 by the end of 2021. Additionally, you can buy, sell, and earn $9 worth of Compound from Coinbase. On Coinbase, you can also earn a bunch of other free cryptos by taking quizzes. Sign up via my link in the video description below, and we'll both get $10 in free Bitcoin when you buy or sell $100 of crypto. Another good app to buy crypto and earn between 3% and 8.6% compounding interest on your cryptocurrency holdings is BlockFi. One of my favorite YouTubers, Andre Geek, also has BlockFi. If interested, my BlockFi referral link is under the video description below too. Another token is Kodi, which pumped almost 900% in the first 3 months of the year, and this token has been in the talks since then. Kodi was launched in June 2019, with an initial price of $0.087. Many algorithm-based forecasting sites predicted that Kodi has a bright future ahead. Forecasting service Wallet Investor predicted that Kodi might rise from $0.292 at the start of May to $0.675 by the end of 2021. Apart from this, the token could reach $1.247 by the end of 2022. Further, on the list, we have SNX. Synthetic is software that allows users to forge new crypto assets that mock both real assets as well as the crypto assets. It is a collection of smart contracts that runs on Ethereum blockchain network. According to analysts, the token might start the year 2022 with a price tag of $65 to $75. Furthermore, the currency is expected to rise if the community concentrates on expanding the user base and enhancement on its platform. The downside is that the token might fall to $45 if it fails to satisfy the users and investors. Lastly, we have AAVE, a decentralized loan system that led to the growth of new interest in the DeFi market. Wallet Investor believes that this token is ideal for long-term growth. The average coin price will be around $1,300 per coin by the end of December 2021. To top this all, the price estimates for 2022 ranges between $2,000 and $4,000. AAVE is a solid opportunity as it has performed exceptionally well in the past, and the future outlook seem bright for the currency. The bottom line is that DeFi is a great way to try your luck and make massive gains. However, you need to have sound understanding and a great deal of experience to flourish in the game. You must have a close eye for upcoming technology and financial updates to rightfully predict the market. If you are new to crypto investing, then I highly suggest my previous video I did about blockchain and crypto as a starter. Start looking into crypto projects, and follow crypto-related news and communities such as subreddit groups. Let me know your thoughts in the comments below and if there is a crypto project that interests you. I'll see you in next week's video and have a good day, evening everyone.